Welcome to another stage analysis video. It's Sunday the 14th of May 2023. I'm going to start off this week's video with a look through some of the stage 2 breakouts from the week, some of the stocks making continuation moves in early stage 2 on stronger volume, and some just testing those levels. And before getting into the regular member content, the major indexes, industry group relative strength rankings, the IBD bell curve, watchlist stocks, and market breadth weight of evidence. So I'll go through those in a bit. But first hand, like I said, getting through, let's have a look at what's been going on with some of this week's more significant stage 2 breakouts on volume. There was a number of earnings movers especially, but Google were the most significant stage 2 breakout of the week with obviously a fairly large weighting in some of the major indexes. I think it's got roughly about 8% or so in the NASDAQ 100 with between the two Google stocks, and about just under 4% in the S&P 500 at the moment, supposedly, from a search a little while ago. So it's fairly significant stock compared to what's going on in the market. You can see it was a significant stage 2 breakout attempt to close near the high of the bar. So volume was roughly, it was above average, but obviously not totally there with the 2 times average volume. It could have been better, but with such a large cap stock such as this, you can see 246 million shares traded and at $117, so massive volume in this one. So you wouldn't expect it to get to the 2 times weekly volume requirement per se. You just want to see stronger volume on the breakout attempt, which we've seen, and like I said, closing near the high of the week, so well above a rising 10-week moving average and 30-week moving average at the moment, coming out of a consolidation in the stage 1 range that it's been in for a while here. So if we go to the daily chart on this, you can see it's been testing that stage 2 level for a good few weeks now, since the earlier part of April there, finally breaking out this week and then gapping a little bit higher there on Thursday, consolidating on Friday with some stronger volume coming in. So well clear now of the stage 2 level in the near term. Ideally, we want to see some follow through, potentially any backup not coming back down below the breakout level here. Ideally, it can consolidate at the higher levels, but if it does come back, we don't want to see it get back below this kind of area ideally. But sometimes obviously you do get some undercutting, but more strength if it can consolidate near the highs here. So at the moment, still in a significant resistance range low with the stage 2 breakout. It's not a huge base compared to the prior stage 4 decline, so starting to break down into stage 4 back around this time here, late April last year. So it's about 1 year since the original stage 4 breakdown there. It's been basing in stage 1 since roughly started to make the change of behaviour in October there, started to develop the initial part of the stage 1 structure, which then broadened out at the start of the year here, this up thrust. So at the moment, would consider it early stage 2, but like I said, with some resistance to consider here. You can see just coming up into the older resistance range here from this prior structure. So if it can hold in here, potentially pop up and consolidate a bit for a while, then be in much clearer position in a few months' time potentially. So, but at the moment, looking interesting there as it starts to move out with relative strength strongly above a now flattening zero line, which is the 52-week moving average of the stock divided by the S&P 500. So looking in good shape at the moment. CRSR, another stage 2 breakout from the week attempt. It did have a good move on Thursday, but then pulled back on Friday to squat into the final day of the week, so didn't see the same kind of strength that we saw in Google there. You can see it's been attempting to break out into stage 2 now for a long time here, so 4 attempts now. This one could again turn into a squat. We've seen it multiple times now with this stock. Had a big deep stage 4 decline through 2021 into 2022. It has been basing since around July time last year, but again, if we go into the daily chart of this, you can see the initial pivot above the 200-day moving average there, which is our initial point to mark for a stage 2 level, and has been tested a few times. So this is our key level around this 18.5 area here. So you can see broke out on Thursday and then consolidated on Friday above that level. So technically a stage 2 breakout, but not yet a convincing one. So we need to see some further follow through of this in the coming weeks, and then again for any backup to hold above the prior breakout level. If, however, squats back down into the range here, it could be yet another failed breakout attempt and could come back into the stage 1 range for obviously further basing. And if it does start to break some near-term levels though, then obviously could get a little bit more bearish at that point. Sometimes the stage 2 breakout point can be obviously the ideal short entry point, as when it has an up thrust and then reverses sharply. It's what we call the reverse of a spring. So it's an up thrust, so it could sharply come back and you could obviously then start to make breakdowns. So at the moment, looking for this one to follow through ideally, or at least consolidate in above the top of the range in order to show some kind of strength. But is a stage 2 attempt, an interesting one. MAXN, so Renewable Energy Group, starting to pop up again this week. We had FSLR with a strong move on Friday. We also had ARRY, which we'll go through in a minute. So MAXN's been coming up in the watch list for a while here, had its largest volume ever back at this point through here. So you can see this bar. So I go into the stock, drop down onto a daily. You can see this gap up move early in March here. It started to break above some near-term levels within the structure, but not completely clear. Hadn't cleared resistance totally. So it was a new stage 2 attempt after faltering in its early stage 2. So we go to the weekly chart here. You can see the original stage 2 breakout was back here. It had a good initial move higher, but then had a fairly significant pullback, came all the way back down to the breakout level and even undercut it a little bit. And then any further rally attempts then started to make lower highs, started to break down. We started to break the 30-week moving average, and then on a second attempt here. So it's actually started to turn into a stage 3 structure through here with the breaks back down below the 30-week moving average here and the failure to follow through. So we did go from stage 2 into a stage 3 and then made a stage 2 continuation attempt back up into resistance and then started to push out again. So at this point now, we're now making a stage 2 continuation attempt. So we've gone from stage 1 to 2 to 3 back to stage 2 again, which is a pattern we see quite a lot, especially in more volatile markets. But a lot of people don't understand that you can obviously go through the stages in that way, in terms of going from, you don't necessarily go from stage 3, stage 4, stage 1, stage 2, stage 3, etc. We're not going in a straight line. Sometimes you're going to go from stage 1 to stage 2 to stage 3, and then you're not going to break down. You're actually going to instead continue up and carry on in stage 2 again. So you don't necessarily have to go from stage 3 back down into stage 4. So you do get failed moves in one direction tend to lead to sharp moves in the other direction, which, as we can see here, big quick move. So next up, it's ARRY, also from the Renewable Energy Group. As I said, big move, had decent earnings. So 19.6% move on the week, still within this structure. You can see there's multiple weekly candles around this current level here, and this is a significant level. We got the IPO, back to the IPO level here. So it's just sitting right underneath that at the moment. Its original stage 2 breakout back here in July in 2022, again, like MAXN, had a good initial move and then basically has gone sideways for the best part of the year now. So again, starting to break, the initial structure started to roll over. We started to turn more into a stage 3 structure now. So we're looking for a stage 2 continuation attempt like we've seen in MAXN in this one. HLIT, so this has formed a bit of a classic Wyckoff reaccumulation structure here, which did actually turn into stage 3 and is now attempting to make a stage 2 continuation attempts. So breaking back out through the lower areas here, back into stage 2, then moved into new highs, stage 2 continuation. Then we've had a near-term buying climax, automatic rally, secondary test, started to form the structure. We've had a shakeout into a spring type behavior and started to move up, near-term up thrust, now a higher low, and attempting to make a continuation breakout. So again, if we look at this on the daily, see that structure a little bit more clearly there. So again, your near-term buying climax, automatic reaction, secondary tests. So we had the shakeout move here, which formed as a undercut the 200-day moving average and test, and then followed through gap up move through here, a little bit of an up thrust, and now with this significant bar here. So as it starts to attempt to break back out again, so assuming that was on earnings, so looking for a continuation move here now. So from this, like I said, more of a Wyckoff structure there within obviously the base. So what we got next? CEL